Is Australia in a recession? A question that you probably thought you didn't need to ask. On the surface, it seems Australia is thriving, boasting robust economic growth that is the envy of many developed economies. But is there more to it than that? Does a more sobering reality lurk beneath these impressive economic headlines? You see, there's a term that needs to be considered: GDP per capita recession. It's a concept that looks beyond the sheer size of an economy and takes into account a nation's demographic growth, or lack of. And it's here that things start to get a bit murky for Australia. The country's demographic growth has been nothing short of extraordinary for a developed economy. But could this rapid population increase be hiding an economic recession at a per capita level? Does this mean Australia is in a recession? Well, let's find out. So, what is a per capita recession? In simple terms, it's when a country's economic output, when divided by its population, actually shrinks. It's a way of measuring the economic health of a nation that takes into account the size of its population. Pretty simple, right? Now, Australia has been known for its steady economic growth over the last few decades, only recently seeing a streak of 29 consecutive years of avoiding a recession coming to an end. Yet, it also has a rapidly growing population, which for a developed economy is impressive. And this is where things get interesting. Australia's economy grew by 0.4% in both the first and second quarters of 2023. But when you factor in population growth during the same period, the economy actually shrank by 0.3% in both quarters. This is a per capita recession. The last time this happened was during the Great Financial Crisis, a time of global economic turbulence. This per capita recession, believe it or not, is in part self-induced. The Reserve Bank of Australia has been steadily raising interest rates, a move that, while controlling inflation and stabilizing the economy, also slows down economic growth. But is this the only issue for Australia? And is it even a major issue? It's tempting to think of this per capita recession as a temporary blip, a hiccup in Australia's otherwise stellar economic performance. But Australia's per capita recession is not something to be ignored. A per capita recession can signal underlying problems in an economy that at a non-per capita level appear not to exist. But there's more to the story, and before we let you know, don't forget to like, subscribe and comment a pineapple emoji if you're enjoying this content. Now, on with the video and let's discover Australia's vulnerability: China. As Australia's largest trading partner, China's economic health has a direct impact on Australia's prosperity. Now, with China entering a slower growth phase and a changing economy, the risks for the global economy are clear, but for Australia, these risks are felt more directly than in the USA or Europe. Certain industries in Australia are particularly vulnerable. Take, for instance, the mining industry. You see, because China's real estate troubles are at the forefront of its economic challenges, the industries that supply it are being hit hard. And for Australia, that's bad news. Australia is a big exporter of iron ore, coal, natural gas and copper, resources that a running Chinese economy devours. But China's real estate industry is no longer running, and Australia needs to think about diversification. But that's not the only issue. You see, let's talk about the Australian dollar. Despite being the currency of a high-income economy, it's still somewhat tied to commodity prices, and as such, any economic tremor in China, like the one we are seeing now, can send shockwaves through various commodity markets, and therefore also hitting value of the Australian dollar. Then there's the tourism sector, another sector with significant Chinese presence in Australia. Since the post-COVID recovery in China has been weak, Australia has been feeling the pinch. Visitor numbers are just 17% of their pre-pandemic levels, much lower than visitors from other nations. High airfares, limited flight options, and a government ban on group tours have all played a part in this decline. So as China's economic slowdown persists and as the Asian giant readjusts to new levels of economic growth, we might see a sustained drop in demand for Australian exports. This could deter offshore investors from investing in Australia and in turn might be contributing to Australia's per capita recession. But now it's over to you. What do you think about Australia's economic situation? Do you see the impact of China's economic changes on Australia as a significant problem? We'd love to hear your perspective, and remember, your engagement helps us create more content like this, so don't forget to hit like, subscribe, and drop a comment. Or a pineapple emoji. I'll be down in the comments section. Otherwise, take care, bye.